All right, good morning, Trade Pros. Sound check 1, 2. Hope you guys can hear me. I think you can. It looks like things are going live. I'm back in the office today. It's been a while, honestly. Last couple weeks or so, I've been coming in less than during the pandemic because now everyone else is in here too. So we're just trying to stay safe. I also got a little office sign installed here. You guys could see this. It's kind of cool. There's Vicky. Say hi, Vicky. Yeah, so that happened. Vicky's just chilling out. As you can see, we're both in dire needs of a haircut. Look at this. This reeks of handmade haircut. Handcrafted to less than perfection. All right, let's jump into this. Today, we're going to talk about a few things, and I think the market's concerned about a second wave of coronavirus. I don't really care what anyone else thinks. It's what's important what the market thinks. And, there's a thought that you have that you kind of take to the barbecue to discuss with your friends, and a thought pattern you have that you use to invest. And I think if you use your backyard barbecue style of thinking to invest, it could lead to a lot of problems. And so it's not really what we think is going on, it's what the market thinks, and we're at the mercy of it, and we have to do what the market tells us. Right now, the market's bearish. It's afraid about a second wave on the pandemic. All right, Apple today closes more stores than it had reopened in the past. Temporarily shut 7 stores in Houston, Texas, as the cases of COVID-19 increased in Houston. It's a breakout there, if you will, of new sudden cases, and it's a little bit shocking. All right, it also closed a dozen stores prior, not now, but in Florida, North and South Carolina, and Arizona. So Apple shutting down stores actually is a pretty good barometer of this spread of COVID-19. And the reason that is because Apple tends to have their retail outlets in really dense areas and populations and malls, all right, where there's foot traffic. And so if Apple's closing, that might mean there's going to be less foot traffic, less sales, less consumption, less GDP, etc. That's why the market's reacting so strongly to one company shutting down stores. It's not just about the stores, it's about the overall pandemic and what the market sentiment is pricing in at the moment. All right, in California, Walt Disney is closing or delaying its plans indefinitely to reopen. So it will not be reopening as it was getting closer. All right. Australia sees the biggest jump in cases since April. UK warned about a second wave coming, and that they think that's already happening. All right. In the US, 45,000 new cases. That's a record amount. And that beats the 38,000 in one single day from April 24th. All right. Texas, massive outbreak with its surge. Germany, though, gives us a little bit of positivity. Okay, here's why Germany's positive. Because their coronavirus infection rate fell, all right, to almost a 3-week low. And remember, Germany had the outbreak, or the second wave, if you will, first. Therefore, if there's a starting to decrease, there is now no longer like a fear out there about Germany that, hey, there's a second outbreak. The same thing is going to happen as the first time. Lockdowns, everyone stay home, depression, more consumption of alcohol. That kind of stuff may not happen if there's a second wave. Maybe we're building herd immunity to it. But we don't even know. Maybe you could get the coronavirus twice. There isn't enough information to have a very firm opinion. And, I love that you listen to media, to your friends and everyone else in your circle, and they have these firm opinions. But you don't know either. There's no data. So it's like some people are out here arguing this thing like they know. Nobody really knows. All right. There is no definitive answer. This is why it's so hard. And the market doesn't either. This is why it's selling off. The market doesn't really know what's going to happen. If we knew exactly how many virus cases there were, if you could get it a second time, all right, if masks really help, what the origination of this thing is it even real? All right, that kind of thing. If we knew all that information, to be perfectly honest with you guys, the market would be ripping. But because it doesn't know that information, the market's taking a little bit of a sell-off. No one knows how this plays out. It's all in real time. You don't need to know how to predict the price action to make money in this market. You really don't. Your prediction actually generates a bias, which loses money. In order for you to make money with a bias, the thing that you think has to happen has to happen. All right? When you ditch the bias and you just watch the markets, whatever is happening is analyzed in real time and making you money, even if that means it's wrong against what you thought would happen. That's the way you approach these markets. All right? It's a little bit of an aside. It wasn't in the notes, but I'm feeling the energy today. All right, this morning also at 6:48. Wow, this note is really in small writing because I clipped it right from the news platform that we use. U.S. is reportedly weighing an extension of China goods tariff exclusions. All right. China Global Times on June 18th said that there's growing calls in Chinese government for a waiver of tariffs, because a lot of people don't know this. U.S. is still maintaining a tariff on $360 billion worth of Chinese goods. China's saying, take the tariffs off so we can buy some agricultural products. Maybe a little bit of a tit for a tat here, because coronavirus happened. We had a phase one deal. It's hard to deliver on the agreement with a massive, literally overnight drop off in demand and consumption. All right, in today's markets, Japan's down 1%, Hong Kong down 0.5%, China up 0.3, India flat, Europe at midday, London's down 0.2, Paris up 0.1, Frankfurt up the same. Futures in the U.S. down slightly. I mean, looking at where we are at the moment, my little screensaver thing came on. We're back up to the 30s. We've tested that level a few times. Overnight low at the 3,005. We're about 20 points, 30 points off of the prior day close. Yesterday, the narrative was what? Sell rallies on the open. If you just close your eyes and found a level somewhere, it would have worked. All right, we got it really right yesterday, and phenomenal. But you're only as good as your last call. We don't dwell on yesterday's. We focus on today. And so I think today, early morning, there's going to be a sell the rally moment again. I think we're going to try to probe that overnight low. If we can't break it, we could see a little bit of bullish sentiment on the way up, not because everyone's buying this market, but because short sellers are getting stopped and taking profit on the way up. All right. Here's something interesting you want to know about. I mean, crude's down this morning, gold's down, Bitcoin's also down, a bit of a sell-off. The other thing you want to know about is unemployment claims. Today they came out at 1.48 million. Expectation was 1.3 million. The market dumped a little bit on this news because there's a higher resurgence, if you will, of people filing for unemployment. However, it's less than June 18th, which came in at 1.508. It's not that much less, right? Don't get me mistaken. It's not like a blowout number comparison to the past week, but it is better. This makes the 12th consecutive weekly decline of people filing for unemployment claims. 47.16 million in 14 weeks have filed for unemployment claims, but that number gets thrown around recklessly. Here's why. All those people aren't unemployed, all right? The continuing claims is the number you got to watch for, and most retail traders have no clue about continuing claims. Continuing claims? Yeah, there's a number that tells you how many people continuously are filing for unemployment. The weekly initial is just initial. It's the first time you're filing for it. I don't know how many more people would have filed if all the people in the lineup are getting through or not for unemployment claims. But I mean, that's been going on since the beginning of the pandemic. All right, so it's interesting to also note that. That's another note. Continuing claims, 19.522 million. All right, expected number was 19.96, so this is actually a lower number. So there are less people continuing to receive unemployment benefits, which is actually positive. All right, but let's see what the market thinks about that. That's all that matters. 8:30 GDP also came out right in line with expectation, -5%. That's what was expected. Nobody's surprised about that. That number was already kind of run through 2 iterations. This is the final. You have advanced, preliminary, and then final GDP readings. Not a single trader cares about this because we've already seen it. We're more interested in Q2 now. All right. This morning, 9:30, got Fed's Kaplan speaking. Got natural gas at 10:30. Kansas City Fed manufacturing survey at 11, which is odd. That usually goes at 10. Fed's Bostic is speaking. Florida's economic relaunch. Fed's Messer speaking. There's a lot of Fed speakers on the wire. Result of a 41 billion 7-year note auction, then money supply and balance sheet. All right. And then that rounds out your day. So early on, what I'll be looking for is to get into a short by selling some rallies. If that doesn't work and flips above a key structure level, then we're going to look to start getting long. All right. We don't have a bias and try to force our bias on the market. We allow the market to dictate to us what strategy we should use. End of the day, I don't want to be right in life. I want to make money and empower others to do the same. Being right to me has zero monetary benefit whatsoever. All right. And if you take that approach with you as well, all right, it's like kind of kill the ego and let the market dictate the next move. And there's a better opportunity that way. All right. I love you, YouTube. Be careful. Manage that risk out there. A little bit of downside. We are at some pretty long-term support structures. If we crack them, selling could accelerate. If we don't, we're going for a pullback today and probably the end of the week and retry a downside next week. Be good. Have a great rest of your day. Manage that risk. TRADEPRO. Peace out. All right, let's get in there in the trading room and send it over to our oil desk. and our post-birthday oil desk. And let's get some levels for oil. Then we'll do it back in Toronto for equities. Set some levels, next best trade ideas, and then we just let them rip. All right, YouTube, take care. Trade Pro Room, let's get this.